Hey guys, if you like our content, don't forget to subscribe, like, and hit that notification bell. Okay, everybody, it's Kevin Wadsworth at NorthStarBadCharts.com, and thanks for joining me today for this podcast. I'm going to talk about the price of gold. Now, you might be aware that I issued a gold forecast back in 2019, 2020, and we've been following that forecast ever since, really, just with some minor tweaks along the way. But the chart that I issued 4 or 5 years ago has now brought us to the point where we are now with gold prices. And I think it's time to update my thoughts and expectations. I've already done that for our website members a little while ago. In fact, I've been doing that continually, myself and Pat, on our website there. But I think it's time to be a little bit more public about what I'm thinking myself about gold and silver prices as we move through the next few years. A little bit of context around that as well. So I'm going to share some charts with you and keep it as clear and as brief as I possibly can. So just give me a moment. I'll share my computer screen with you. And I'll also switch the video camera off so that you're not too distracted by me. Right, okay, so this is the gold chart that I put out back in 2019. In fact, this was March 2019, so over 5 years ago now. And I'll just highlight that chart for you. So back then, the expectation, the forecast was for a move up to the $2,000 area to the ARC target, and then for a long consolidation pullback process that I was thinking would probably take 3 or 4 years, having reached the top there somewhere perhaps around 2020, and then breaking out above 2000 again, probably before 2025, so 2024, this year effectively. Now we've seen that process take place. We've seen the move up to $2,000. We've seen the long multi-year pullback taking place, also in association with this cyclical low here. These are the 7 to 8.5 year cycles that we see for gold. So that was part of the reasoning for my my expectations for or my assessment that there was quite a high likelihood that we would trend down towards a low point here, perhaps somewhere around $1,500 or $1,600, then moving strongly to the upside. My thoughts were that perhaps the initial target might be somewhere around or just in excess of $2,800. Okay, so that was 5 years ago, and we now know, of course, how that's progressed. But before we go on to that, I just want to set a little bit of the background scene and some of the reasoning behind why my expectations are what they are, really. So this is the chart for the US money supply, M2 money supply versus gold. And when the chart is dropping, gold is highly likely to be in a bull market. It means that gold is outperforming money supply. And as you can see, during the last bull market from the early 2000s to 2011-12, this chart was moving strongly to the downside. And ever since the peak in 2012 for gold, 2011, we've seen this rising sort of wedge pattern forming, which we've had a sort of complex topping process going on, but we've broken down very clearly and decisively now. So this particular chart, this particular piece of evidence is telling us that we are entering a period where there's a very high likelihood, based on this chart, of a precious metals bull market. And already gold has moved up $800 since I issued this chart and said that that was the case. This is the stock market, the S&P to be precise, versus gold. And the S&P needs to break down versus gold to confirm capital rotation. Precious metals bull markets, in fact, bull markets in any investment sector really, are identified by capital rotation. There are periods when capital flows into a particular sector, and there are periods when capital flows away from a particular sector, and you can spot that on ratio analysis charts. And the S&P versus gold chart needs to break down convincingly to confirm that precious metals bull market era is in force. You can see it happened back here in the early 1970s. It happened here during the early 2000s. And in fact, my view is that this whole period for the last several years, since 2011 to now, has been just one big pause in an ongoing precious metals bull market. And when this breakdown is clear and obvious, then the destination is way down here somewhere and we're going to be on course for a resumption of what was just the start of a precious metals bull era, with a pause along the way. This indicator at the bottom is the rate of change indicator, so it's the 7 let me just confirm that. Yes, it's the 7-year rate of change. It's the 28 period on the quarterly chart. So it's the 7-year rate of change. And the 7-year rate of change, when it crosses the 0 line, as you can see by these vertical dotted lines here, helps to confirm that precious metals are entering a bull era. It happened in 1972. It happened or was confirmed in 2004. And we're very, very close to doing the same again. So this is a particularly strong piece of evidence for us. The Dow to gold ratio is also saying the same sort of thing, really. In the 1930s, we had a very clear breakdown. Precious metals were bullish during that period. Stock market crash, of course. And during the 1970s, of course, the stock market did the same thing. It went nowhere for 10 years. It fell 50% and went nowhere for 10 years. It took 10 years to get back to that point. Gold rose to over 2,000%. Even in the 1930s, you can see this, the stock markets fell, in fact, to 85%. It took 24 years to get back to where they were. And the same thing happened in the early 2000s, not that long ago, of course, and the stock market fell 50%. In fact, it fell 50% more than once. Did it twice. It did it in 2008 as well, and took 13 years to get back to where it started. Gold rose 650%. So we're very close to confirming that breakdown again, and we're breaking down from this rising wedge pattern. So it's strongly suggestive to me of a breakdown for the Dow to gold ratio, which puts us in a high probability scenario for precious metals being in a bull run. Okay, the final piece of evidence that I wanted to show you here comes from the again, it's the Dow to gold ratio, but it's reflecting, or it's showing how the silver price reacts. So the indicator at the bottom is the Dow to gold ratio, and it's the, I'll just put the indicator on there, it's the rate of change for the Dow to gold ratio. So it's a little bit complex to get your head around, but this bottom graph here is the 7-year rate of change for the Dow to gold ratio. So when it breaks down, silver begins a very strong bull market. You can see it happened here in the 1930s. Happened there briefly again, sort of in the early 1940s as well. We saw it happening here in 1970. We saw it happening around about 2004, as I mentioned, and it's happening now. So what did all those periods have in common for silver? Well, silver rose strongly during each of those periods, and post the 1970s, which was when the US dollar backing with gold was broken, if you like. The Bretton Woods Agreement was torn up, and gold was allowed to find its market value, if you like. It wasn't the dollar wasn't backed by gold, so the gold price wasn't fixed, if you like. From that period onwards, we saw a very strong reaction in the 1970s for the price of silver, as this indicator broke below the 0 line. And we saw the same thing again in the early 2000s, 2004. The indicator breaks below the 0 line, price of silver goes on a massive bull run. And what's happening now? Exactly the same thing again. This indicator is just touching the 0 line. In fact, it's just gone slightly below the 0 line, and silver is starting to wake up. Okay, so that's all of the background evidence. I don't want to go into any more of that. I just want to go straight to the roadmaps for silver and gold. So the roadmap, the updated roadmap for silver, is similar to the previous one. We have this 45-year cup and handle pattern, which is still building out. The initial target area clearly is going to be somewhere close to those previous highs. Probably we're going to get, I would suggest, probably above $40. There's some resistance around sort of the mid-30s, 37, 38. But silver being silver, quite likely to just punch through that and spike upwards to somewhere above $40 seems the most likely scenario. So somewhere in this initial target bubble area. I think at that point, combined with gold and also what's happening in other markets, later on this year, we may find ourselves in a situation where there is high risk in the markets generally. And if that happens and the stock markets begin to roll over, And we kind of need that for precious metals bull market. And we need the stock markets to either drop pretty dramatically or drop substantially over a period of time. But either way, some significant drops in the stock market will allow gold to clearly begin to outperform the stock market. And that's how this whole process gets underway, with gold outperforming the stock market and the gold to SPX ratio breaking out. And if that combines with a stock market event of some sort, and we know the problems that we have with bond yields, for example, at the moment, and the yield curve inversion seems to be pointing to the likelihood of a market event of some kind later this year. So that really is my thinking behind the relatively high likelihood of a significant drop. Could be from anywhere close to $50 all the way down to somewhere close to $25, perhaps somewhere around $26 or $27. Hence my warnings of a drop for the silver price of 30, 40, or even more than 40%. A sharp, sudden drop combined with some kind of market event later this year, out of which I would expect precious metals to outperform like a phoenix rising from the ashes, and for silver to make new all-time highs, which of course it hasn't done yet. Gold has, silver hasn't made new nominal all-time highs. So at that point, probably next year, 2025, silver to make sustained new all-time highs. And from that point, with little corrections on the way, or smaller corrections along the way, I expect to see silver price moving in the late 2020s, so by 2027, 2028, towards the $100 mark, and probably beyond $100 for an ounce of silver as we get to 2027, 2028. That sounds crazy. That's only a double from those previous all-time highs, whereas historically speaking, silver does a lot more than double. It can very easily triple, quadruple, or go up by a factor of 5, 6, 7, or 8. So seeing silver at $200, for example, or even $250 would not be at all historically unusual. So that roadmap to triple-digit silver remains in force, but we have to overcome this initial hurdle first. And that takes us on to gold and my gold forecast. We're getting close to being pretty stretched on some of the technical indicators at the moment. So there's a couple of possible scenarios, and this goes for the silver chart as well, actually, although I didn't mention it, is that a pullback now to key support, which for silver would be a 25 area, 20, probably a little bit below 25. Let me just have a look. Yeah, 24.70, something like that. So that is a possible scenario at this point in time, that we pull back now and come back to support. But I think probably more likely is that gold reaches that target that I was envisaging all those years ago of somewhere around $2,700. There are some resistance levels a little bit low. I'll show you in a moment. So somewhere certainly higher than we are at the moment, 2.6, 2.7, 2.8, that sort of area. And then some kind of significant drop later this year, out of which we rise strongly beyond $3,000, $5,000, and further. So a move to well beyond $5,000 by the late 2020s seems highly likely to me. And if I was to be put on the spot to give a number, I would probably say somewhere around about the $8,000 to $12,000 region would be my expectation for the late 2020s. And that shows up in another gold chart that I've got. If I can just find it, here we go. This is the more detailed roadmap with some technical explanations at the bottom here. You can probably read these in slow time if you pause the video. But major corrections happen when this indicator reaches the 40% area, 40% region. It's 40% stretched above the moving average. This is the distance from moving average indicator. We're not there yet, but 40% above that moving average would be, I think, somewhere in the 2,700 area. Also using Fibonacci extension techniques also gives you somewhere around 2,700. There's some resistance if you take the highs all the way back in 1980 and join them with the highs in 2011. There's only 2 touch points on that upper line there. So it's not really a valid resistance line yet, but it could become one if we were to touch it somewhere around 2660, 2700, and then pull back strongly. That would then be a confirmed three touch point resistance line. You can join any line with 2 points. Any 2 points can be joined with a straight line. It's only when you get a third point that that line actually starts to take on some relevance and some meaning in terms of the price action. So a move to that area anywhere between sort of 25, 35 I've got there, the high 2500s, 2660, 2700. That would be where I would expect gold price to then pause and then see that pullback that I was talking about, which would probably be to around somewhere around 2100. So quite a big drop, $500 drop on $2,500. That's sort of getting on for sort of 15-20%, isn't it? So, and then from that point, strong breakout, strong move up beyond $3,000 and quite possibly up to towards $3,500 or $4,000, somewhere in that sort of area, before perhaps seeing a back test of that breakout in the 3,000 area and then off up. It goes into the late 2020s. And as I said, targets in the 8,000 to 12,000 area are consistent with quite a lot of different technical analysis techniques that I've been studying and looking at. So a quadrupling of the current price from the 2,000 area up to 8,000 or beyond seems highly likely to me. And that's my gold and silver roadmap through to the late 2020s. Got any questions? Pop them into the comments. I hope you found that useful, and I hope you're able to make use of that information. And we'll keep monitoring these long-term roadmaps, of course, as the months and the years go by, just as we have been doing since that initial forecast back in 2019 there, which is now sort of done its job and is complete, of course. Okay, thanks for watching and listening. Enjoy what's left of your weekend and speak to you all again very soon. Bye for now.